VT is a popular ETF from Vanguard to invest in the entire global stock market. But is it a good investment? I review it here and discuss the what, why, and how of the fund as well as its historical performance. VT is the Vanguard Total World Stock ETF. It launched in 2008. As the name suggests, the fund captures the global stock market in the form of over 9,000 holdings across large, medium, and small companies around the world. It does so by tracking the FTSE Global All Cap Index, which is market cap weighted. In case you didn't know, Vanguard is the typical go-to provider for reliable and highly liquid index funds with the lowest fees. If you've landed here, hopefully you do already know that index investing is a great way to diversify your investment portfolio and avoid stock picking and sector bets, which tend to underperform the market over the long term. Many novice investors are familiar with VTI from Vanguard, which is the total US stock market. But more experienced investors know it's likely wise to diversify in equities outside of one's home country, and that the US stock market cannot outperform all the others in the world every year. US stock market dominance is a fairly recent phenomenon that we would not expect to continue, particularly at current valuations. There have been plenty of extended periods throughout history where a global portfolio beat a US portfolio and with lower volatility and risk. I discussed this idea of international stock market diversification in detail in a separate video here. Given the fact that we can't know the future, the market cap weighted VT allows for the most agnostic approach to invest in stocks in one single fund. If one country's stock market does better than others, its weight rises within the fund, and if one does worse, its weight falls within the fund. This means that at any given time, VT represents the accurate relative weights of all stock markets around the globe. As such, VT is the rational choice for the set it and forget it 100% stocks index investor who wants to be completely hands-off. This is where the famous VT and chill mantra comes from as the default Boglehead's recommendation for young investors. At this time, VT has impressive assets of over $35 billion and a relatively low expense ratio of 0.07%. So is VT a good investment? Of course. VT is indeed a good investment in the sense that stocks in general tend to be a good investment, and that, once again, diversification seems to be the only free lunch in investing. After all, VT is the entire global stock market. Going back to its inception in 2008 and looking through 2023, historically it has had an annualized return of about 10% with volatility of about 16%. VT is a great single fund solution for investors to be well diversified across geographies, styles, and cap sizes within stocks. Don't mistake this broad diversification as meaning VT is low risk though. Stocks are inherently risky investments. That's why we invest in them. Notice the drawdown of nearly 26% during the fund's brief lifetime. Conveniently, as is the Vanguard way, VT is also very affordable at only 0.07% and has low turnover. This saves the long-term investor big bucks on fees and trading costs over their lifetime. VT also has an Admiral Shares mutual fund equivalent, VTWAX, so look out for that one in your employer's 401k menu. You may still feel hesitant about investing beyond US borders. Click this video here and hopefully I can convince you. What do you think of VT? Do you own it in your portfolio? Let me know in the comments. Thanks for watching.